Yeah, hi there. Well, it's been a very eventful couple of weeks. There's never a dull moment in this market. So, jobs data this morning was the big news. The worry in the last week was is the macro environment solid, or are we going into a weakening environment, or should we be worried about a recession? When I spoke to you 2 weeks ago, we were coming off basically three data points that were quite supportive. So we had strong consumer data, we had strong industrial production, and then to top it off, we had very strong housing data. So, our kind of takeaway from that was this is a pretty solid environment for equities, despite going into this more volatile period in September. So this morning, we got confirmation that the jobs environment is still also quite stable. Look, the estimate for jobs for September was 145,000. The number came in at 136,000. It's a little bit weaker, but in the context of the news that we've seen in the last couple of weeks, where you had some indication from the surveys. There's such a thing called the ISM surveys. This is the Institute of Supply Management. They basically do services on the manufacturing and the industries and services sector, and it was clear the manufacturing side of the economy is contracting, so that was quite negative. And then we got sort of a double whammy with the services side also coming in weak. So there was a lot of attention paid to today's employment number to see whether we're still coming in at a level of employment that's consistent with about 2% GDP growth. So if you think about GDP growth, if you go below 2% GDP growth, that's when you start worrying about year-on-year declines in earnings per share growth. So if we can maintain a 2% GDP growth environment, and this environment where you have basically no inflation and interest rates actually declining, not just here in the US but globally, that again sets up a very nice environment for stocks. So despite being a slightly disappointing number at 136,000, today, the market is rallying quite nicely today. The unemployment rate actually also fell, and that has something to do with the size of the workforce and the number of employed people. So the unemployment rate actually dropped from 3.7% to 3.5%. Now that is the lowest unemployment rate since December of 1969. So obviously, politicians are going to be all over that today to basically make their case. Let's turn to the elephant in the room is obviously impeachment and how that will affect markets and so forth. The debate obviously is raging. Both sides are pretty much entrenched. We went back to see how did markets fare in previous cycles. So look, I'm old enough to have remembered the Nixon impeachment days. Those were obviously very politically charged times, and this was the early 70s or mid 70s. But I think the key point is, so if you look at the 1973-74 market, it was a completely different time. And if you, we can send you the data on this. My colleague Terry Gardner wrote a very nice piece just this week on both the Nixon impeachment and the Clinton impeachment to give you some context what the economy was doing and what markets did. So if we turn to the Nixon years, we were basically in a bear market. So 1973-74, when the articles of impeachment were introduced against Nixon, that was around November of 1973. You were already in a bear market, so the total bear market the market during that period went down about 42%. And it's interesting, so following that pretty severe bear market of 73, 74, it actually set up a pretty good bull market after that. So, I mean, the economic environment turned. If you remember, the 70s was all about inflation. We had the oil shock, the oil embargo, and so forth. So these were very different times from an inflationary point of view, from an interest rate point of view, from an economic growth point of view. So very different times. So in a way, the Nixon impeachment and then the resignation of Nixon, which was around July or August of 1974, kind of put a bottom into an already declining market, and then actually set up a pretty nice bull market after that for the next couple of years. So if we turn just to the Clinton years, that this was the 1990s. If you remember that, the House commenced impeachment proceedings against Clinton. That was really in October 8th of 1998. We were already in a pretty nice bull market. This was obviously the internet. This was when the internet was built, and there was a lot of growth and productivity growth, especially through all these new technologies from the internet. So all through the trial or the impeachment proceedings that started in 98 and sort of came to a head in 99 when Clinton was acquitted, the market went up about 48%. And then you had basically the top in the 90s bull market was sort of in the 2000 period. So again, impeachment doesn't tell us anything really about what was driving the market. It was really economic fundamentals. And that's the key point that we're trying to make here. It's really the economic context which drives markets. This is earnings per share growth, this is GDP growth, it's what the Fed is doing, what interest rates are doing, and what inflation is doing. And that really determines what impeachment will give us. So if you want the data, I can send you Terry's weekly from this week, which has all the detail in it if you want to know more about that. One last point on the micro side, it's very interesting. Apple is a stock that we've owned for many years, and after the most recent investor meeting or developers meeting that they held, which you can actually see on YouTube if you Google it, it was about 2.5 hours long. We came away from that, listening to that meeting and watching the new products come out, very impressed. Basically, our view was that here's a company that's ready for 5G. If you think about 5G, it's really getting to the next level of connectivity for devices, and the 5G infrastructure is still being built out, and is probably still about a year away. But all of the device makers and IT companies have to get ready for this environment where speeds will accelerate. So downloading speeds and streaming speeds will accelerate 10 times versus what we have today. And you need devices that can actually handle that. So if you look at just the iPhone 11, very impressive device. It's not yet a 5G device, so there was some worry that people wouldn't buy this phone yet and wait for a 5G enabled phone. But if you look at the features of the phone, the processor is a lot stronger. It can handle a lot more power, a lot more speed. The second thing is, which is probably the most important for the new phone, is the battery is a lot better. Basically, the battery can last about 5 hours longer than the old iPhone 10, which is a massive improvement. And lastly, is the camera. I mean, basically the iPhone 11 camera or the Pro camera, they've gone to 3 lenses. I mean, the quality of that camera, even if you use it for video, is really impressive. I mean, you basically get 4K type video quality out of that phone. It was interesting to me, the Wall Street analysts didn't really seem to be impressed by that. It's my opinion, this is more anecdotal, that camera really is one of the main things that drives the sales of this phone, because most people have ditched their their big digital SLR if they were using that for things like the iPhone. Really, there's no difference between a DSLR, a digital SLR, or an iPhone anymore in terms of quality. And even if you look at GoPro, I mean, if you looked at GoPro's stock price recently, you would see what's happened to them. There's really no more difference between an iPhone using that as a video device versus a GoPro camera. So today, the news came out of the supply chain for Apple, that Apple has actually decided to increase its production by 10% because they're seeing very strong orders for the iPhone 11 right out of the gate. So that negates all of the sort of pessimism and negativism that we saw from Wall Street sales side analysts who are saying, well, there's really no unit growth in iPhones, and they are going through this transition from, their regular from a regular phone to a 5G type environment, and that's not occurred yet. So they were quite pessimistic. So we're happy to see today the market is up quite a bit because of the jobs number, erasing some of the losses that we saw this week, and Apple is one of the top performers there. So that said, our marching orders for the rest of October is that economy trumps impeachment. So that's taken from Terry Gardner's piece this week. So we continue to forge ahead on the equity side. Thanks for listening.